Welcome to Dr. Fred Markets. This is not financial advice. The gap between those who understand finance and those who don't is growing every year. Markets, crypto, artificial intelligence, they just require attention. You showed up today. You're on the right side of that gap. Let's make it count. Let's go.
You're being paid to hate uranium while billionaires hoard it. NXE, a uranium developer, is down around 2% today at about $10, while the S&P 500 kisses fresh highs and Nvidia creeps higher again. At the same time, Iran, Pakistan, and the US are dancing around nuclear inspections, with headlines ping-ponging between deal and denial, while nobody on FinTwit talks about what that means for uranium demand. And in the background, the real AI gold rush isn't in GPUs anymore. It's in the brutal, boring question: who keeps the damn lights on when data centers start eating national grids? Here's the cliff. The market agreed to worship AI stocks and ignore the thing that powers them, and that disconnect is exactly where smart money hides. Let's stitch this together. Signal 1. NXE and its uranium buddies trade like trash on days when AI headlines are bullish. The crowd buys the shiny chipmaker and throws out the fuel. That gap is information. It tells you crowds still treat energy like a side quest, not the main story. Signal 2. Data center power demand isn't growing, it's detonating. US grid planners project AI-driven electricity use to double data center demand in a few years. Some regions already panic about brownouts. Politicians scream about TikTok, but AI is about to do more damage to your power bill than your social media addiction ever did. Signal 3. Nuclear deals are back on the table, quietly. Trump saying Iran completely agreed to inspections while Tehran denies it? That's noise. The signal is that everyone at the adult table knows fossil fuels alone don't cover AI's appetite without torching climate pledges and grid stability. Nuclear doesn't care about OPEC drama. It cares about math, baseline power, or blackouts. There's no third option. So what do these three signals shout when you listen like an investor, not a doom-scrolling NPC? They say, AI's real bottleneck isn't chips, it's electrons. And the only scalable, 24/7 low-carbon power source that doesn't rely on our fantasy batteries is nuclear. Uranium is not a story about old energy. It's leverage on the AI energy crisis no one wants to admit exists. Here's the one thing you probably didn't know. The fuel cost of uranium inside a nuclear plant is tiny compared to the total cost of running that plant, single-digit percent tiny. That means if uranium prices double, the cost of electricity from nuclear barely flinches. But uranium miners' margins? They don't barely flinch. They explode. Mechanism time.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
Nuclear plants are basically enormous, slow-moving capital monsters. Once built, turning them off is political suicide. Regulators care about uptime and safety, not your trading P&L. So if AI keeps driving electricity demand vertical, utilities have exactly two moves. 1. Squeeze more life out of old plants and extend licenses. 2. Quietly line up long-term uranium supply before the herd wakes up. That's already happening. Long-term contracting in uranium has ramped again, while the spot price wobbles and retail traders stare at Bitcoin candles. Utilities think in decades, not election cycles. They don't care that NXE is red today. They care that they lock in fuel for 2035. The punchline: you're arguing about which AI stock has the cutest earnings beat, while a non-sexy commodity positions itself as the toll booth for the entire AI era. So what does this mean for you, sitting there watching BTC down 4% and ETH down 3%? 1. Stop pretending AI and energy are separate themes. Every new model is an energy trade in disguise. 2. Understand why uranium is weird. Higher fuel prices barely affect demand, but drastically affect miner profits. That's asymmetric. That's rare. 3. Act like an adult. Instead of chasing whatever coin Twitter yells about, study the uranium cycle. When contracts get signed, who has real projects, and how nuclear policy shifts after every energy scare. Concrete action, not vibes. No, this is not financial advice. But here is the truth. If AI keeps scaling, the grid breaks without new baseload power. If grids add baseload power, nuclear walks back into the room, whether activists like it or not. If nuclear walks back in, uranium miners get dragged from weird niche to mandatory allocation faster than your favorite meme stock did in 2021. Your job isn't to worship uranium or AI or any ticker. Your job is to see the plumbing before everyone else. Learn how uranium pricing works. Learn which miners are explorers versus near production. Track nuclear policy headlines with the same intensity you give to Fed meetings. Most people will discover uranium the day it's on CNBC with a flame emoji. You'll either be already educated or already late. This is not financial advice. It's a reminder that real wealth hides in the boring leverage points nobody wants to study. AI gets the headlines. Uranium gets the cash flow. Decide which side you prefer. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.